Welcome back to the show, everyone. I'm David F. Haas, episode 135 with my new friend, Jason Primeau. Jay, thanks for taking the time coming into the studio. I always pluck guests. Jason has messaged me and we're going to talk about some life insurance stuff. And I'm like, hey, do you want to come on the podcast? And he graciously said yes. So,
well, thanks for having me. Happy to be here.
Yeah, well, I'm actually excited for this podcast because I think it's going to be good for us to kind of dig into what you and I were going to talk about in our meeting anyways, which is about, investments and retirement and how there's ways to tax shelter legally and all this kind of stuff. So I think that'll be really good. But before we get into that portion of it and how people can invest their money, we'll just kind of talk about how you and I met and how you made the shift. But essentially our daughters dance together, do gymnastics together. And, we were seeing each other in the waiting rooms and whatever else. And then we also this was kind of like during the COVID time, and we had similar views. And I live a very similar lifestyle. Like we were both like bachelors, like extreme bachelors. That was me too. Then you have kids, and everything kind of changes, and you start looking at things differently. And so I think you have like a unique way. You guys are homeschooling your kids, which I think is awesome. And because of that, you kind of like started making some serious shifts in your life, right? And so why don't you kind of give me a little bit of history just so like people know who you are and kind of where you're coming from with respect to, your shift from being in insurance, which you're still in insurance, but like into running your own thing and how that all kind of played out.
Absolutely. Yeah. So, I think if I go back to sort of the birth of my first daughter, Peyton, when she came along, it was a very life-changing experience for me. It was a catalyst to, going from a lifestyle where I just did whatever I wanted, whenever I wanted. As a pretty high income earner, I was able to do a lot of really great things. But it made me realize I needed to make some changes and start planning for my future and taking care of my family, making sure that if something were to happen to me, that my family was taken care of. And so, she was born in May of 2019, and we started putting a plan together. I actually met my now business partner, Sean, and he helped us sort of put a plan in place to sort of address those needs and those changes. And I was a good spender. I wasn't a good saver. Mm-hmm. I think that's pretty true for most people. And so he showed me a few things that worked for me and for my habits. And it was the first time that I'd seen a lot of the more advanced financial concepts. And so that was kind of, the start of we planted the seeds back then.
Yeah, right. Because you had a really lucrative career in insurance, right?
Yeah, I've been in property and casualty insurance for almost 22 years now.
Right. And it's sort of like, because it's funny because I obviously went down the road of entrepreneurship. I've been running my own company since I was 16. And one of the things, because all entrepreneurs will go through this, and I'm sure you've probably done this now that you're running your own thing. Jason's also the owner of Spectre Financial, which is what I forgot to say. But you always go through this period of like, I should just go work for somebody else, or I should just get a job and like I can just go home every night and put it all away. But one of the jobs that I was going to do was financial planning, mutual funds, that kind of stuff. I had a great contact. Ed Claremont was going to kind of get me set up, and it was going to be like this amazing thing. And Ed said to me, is like, if you really put your mind to it, you put the effort in that you're doing, you could be making like $500K a year doing this. And I was like, oh shit, that'd be like some good income, and so you were kind of in that world where, and now I think there's insurance guys that get really bombarded and are really overworked, and they become like really tied to their desk essentially, where they have endless clients calling. And so I think there's a good and a bad, and then maybe we should just talk about that a little bit, as like, because something was a little bit off within your insurance role and like working under a company in some ways. And so you said, hey, I got to go out and do my own thing. And like, what was the shift? That's what I'm looking at. Like, what's the catalyst that makes you say it's time to like start, maybe doing this within my own company?
Yeah. So entrepreneurship is not for everybody, right? I mean, that's the first thing. But I knew probably within the first 10 years, I would say probably by the time I was 30, I knew that I wanted to do something for myself. But figuring out how to get there is it's a challenge. And I had a pretty good gig. I mean, I was one of those $500,000+ earners. Mm-hmm. And honestly, I could do that working a few hours a day. Like COVID was a perfect example. I would work 2 to 3 hours a day from my home, from my basement, while I got to raise my daughters and still bring home in excess of $500,000. So it was nerve-wracking to think that, hey, I might walk away from this very, very cushy situation to go try to build something. But I did want to do it. And so my initial instinct was actually to potentially try to buy in or take over the brokerage I was working for. That didn't work out. They sold to a major firm. And actually that was sort of the catalyst to launch Spectre. So we, within 3 weeks, we actually were incorporated. So the firm I was working for, I still have ties to, sold on November 1st. And by November 23rd, we were incorporated. We didn't open our doors until March 1st. And initially my intention was never to actually get into selling financial service products. I wasn't going to do that. I was going to help build the business on the back end. Sean, my partner, was going to be the face of the company and sell and train and all the front end stuff. And we got so busy so fast that we needed more salespeople, and I saw value in what we were doing. And so I jumped in with both feet. At the end of the day, the biggest difference for me, both are good careers. You can make significant income in both. But at Spectre, I was building my own thing.
Yeah.
And there was a lot more value in that for me. And the second piece was, when I look at selling insurance on the property and casualty side, I mean, everybody needs it. They have to buy it. So it's a good market. And if you care and you're good at what you do, you can make a good living and it can be meaningful. But at the end of the day, I'm not going to change people's lives all that much on the property and casualty side. Whereas in financial services, some of the things that we've been able to do, I've only been an advisor for a little over 2 years now. But it's life-changing for some people. Mm-hmm. I've had grandmothers break down in tears at the table because they're so happy.
Yeah.
They see a plan, like things like that. You don't get to see that on the property and casualty side. And so it's been a struggle, like every startup. We've had growing pains. We grew too fast initially. There's been setbacks here or there. And instead of getting paid, I've been putting money in, right? As every entrepreneur will attest to. It's not all, glory and paychecks, right? So it's been a lot of work, but it's been very rewarding. And there's a light at the end of the tunnel. We're in our third year now, and things are going really well. We've, I think, got a handle on the growth aspect of the business, and it's been extremely rewarding. Can't say enough about the team that we have. We've got some really good people there.
Yeah, and you guys are primarily in like the financial. Are you doing insurance? Like, you're doing life insurance,
yeah.
But you're not doing property insurance and that kind of stuff, or you are still involved with that?
So I am still tied, with my prior employer there.
Okay.
And so I specialize there. So that's another thing too. Like, I learned early in my career that trying to be everything to everybody doesn't work. So you mentioned some of the people in insurance that struggle, being overwhelmed. I think when you become a specialist and you carve out a niche for yourself, it allows you to focus your time and energy into one thing instead of trying to be everything to everybody, where you're scrambling all the time. And so I learned that very early on in my career, which led to me being able to be highly successful there. And so I'm able to maintain my clients, even grow my business on the property and casualty side while still doing this, because it takes so little effort, because people seek me out now.
Yeah.
Right. You put in enough hard work and time and effort and build the right relationships with the right people, and people see value in seeking you out for your expertise now. So,
yeah. And let me ask, because that's what I'm curious about, because, I remember there was like this one like pivotal moment in my life where I was like at the marina, and I was like hanging out with my buddy, like my sailing mentor there. And, it was like middle of the afternoon, and this guy that's a doctor that sails with me comes up and he was like, "You're here again," and like, I'm like this, at this time I was like, 38 or something, and it's the middle of the afternoon and I'm there just hanging out, chilling with my buddy Len there. And I could see like almost like the envy in his eyes of like, holy fuck, like I went to school. He's like a really well-to-do doctor and, drives a Porsche and the whole deal, but
he's working 50 hours a week.
He's killing himself. Right. And he's just like, he's tied to that. And I see that with, you see like massage therapists, for example, they just always get burnt out. Even my chiropractor who was just in here, and she's awesome, like the great chiropractor, but she's working, like she is tied to that business. And so now what I'm interested in to get from you though is, what is the difference between what you were able to do in insurance, even when you're in insurance, and you're able to take that step and say, I can hone this into like 3-4 hours a day kind of work, to the insurance guy that we all know, like there's an insurance guy or a doctor or whatever that is like, they're just like overwhelmed. Like they are so tied to their desk or to their profession. So how were you able to see that and make that shift even when you were still, before you went into your own thing?
Yeah, I mean, so the biggest thing is that I've always believed that my most valuable commodity is my time. Mm-hmm. At any stage of my life, I've always believed that. And so knowing that I can monetize, my time, I can, if I take the knowledge I have and compress, my to-do list, my task list into a 3 or 4 hour effort instead of dragging it out for 8 hours. I heard a stat that, the average employee gives you in an 8-hour day about 3 hours of production. Yep. Well, why not just give 3 hours of production and then move on with my day? Yep. And so, that's always been my mindset. Like, let me see how I can get a full day's production done in a quarter of a day and move on, because and now it's even more important. Before it was important because I wanted to go have fun. I had boats, I had golf memberships, I had all those things, right? And I traveled and I did a bunch of things. I used to sleep in. I was not always an early morning guy. I would sleep in till 9 or 10 o'clock. I'd make it to the office by 11, but I was done my day by 2. Yeah. And people would look at me and they were so, you could see there's like, I don't want to say hatred, but like definitely some envy and jealousy, because I was outperforming them and sometimes making up to 10 times more money than them, working 2 and 3 hours a day. But to be honest with you, as an employee, I'm a terrible employee, right? I'm a terrible employee because, the average employee will come in, punch the clock at 7, 8, 9, whatever it is, and stay the whole day, and they'll appear to work hard. I didn't do that. I knew that my time was better used doing other things, living my life the way I wanted to live. So I had to maximize my work hours, right? I would do what some people would do in a week, I would do in a day. Yeah. Right. But it also meant like, listen, my job, the niche that I carved out for myself required me to be on the road a lot. So there was a lot of sacrifice that way. I mean, I would spend, 7 or 8 days a month in Toronto, right? In hotel rooms, sleeping on crappy beds, driving through snow covered roads or whatever it might be, where, a lot of people didn't want to do that. So they would, show up at 9 and leave at 5 and sit at their desk all day. Right.
And so, and I'm a huge, I think you're banging the nail on the head there, because like one of the things that I realize is that, I can get more work done in like a 3-hour window if it's focused work. Than I can in like 8 hours of kind of like dinking around. Then actually the 8 hours of dinking around is worse because it's not focused. And so now I work in like 90-minute windows and I try and turn off all distractions. But it's like, is that essentially what you were doing? And then also having the ability to have the freedom of like, you didn't have kids yet, you weren't married and all this kind of stuff. So you could say yes to a lot of meetings and things that other people that had more attachments. But is that what you were thinking that was the differentiator for you, was that you just really know how to maximize your time?
Yeah, I was very focused. Yeah, very focused. I did one thing and I did it extremely well. Yeah, amazing. And I remember actually being probably in high school when they were teaching you how to write a resume, and it was like, hey, tell people you're good at multitasking. No, I don't want to be multitasking. I want to focus on one thing and be the expert in that one thing, because I mean, we've all heard the analogy about the plumber who, comes over and taps on your pipe and fixes the problem in 30 seconds, but gives you a $300 bill, right? I mean, I believe in being an expert in your field. Yeah. People will pay for expertise. right? I don't want the plumber who's going to come and be here 5 hours and not get the job done and still give me a bill anyways. I'd rather pay the guy the $300 for 30 seconds to get the job done.
Yes. Yeah. 100%. Yeah. And so now how has that translated into entrepreneurship? Because in entrepreneurship, one of the main problems is that you get pulled in a bunch of directions. You know, you can't, it's harder to be that fixed focus. Like this morning, I was like, you know, while I'm working in a focused environment, I'm tweaking a landing page for someone that's holding an event at Limbo Vita. I'm messaging, my insurance guy to renew my insurance out there. Yeah. I'm working on a refinance for the mortgage out there. It's like I got a million things on the go, and it's hard to be that. I guess you're the expert in running your business, but there is a lot of hats that you're putting on when you're the business owner.
Yeah, and not only that, there's a lot of things. When I got into the business, I thought it would be, very similar to my career. I'll go sell. But you have to wear an HR hat. Mm-hmm. You have to wear a marketing hat. You have to wear, an IT hat, a finance, payroll. There's so many things that I don't think I really expected when I got into it. The nice thing is, you have to find good people, and I found some good people. So I've got a couple of really good partners. We all have a different skill set. We all do different things. I trust them to do their role. They trust me to do mine. And we've got some other team members that, really are great employees. And I mean, you just do the best you can. But I do believe in letting people help, right? I can't be everything to everybody all the time. So I have to entrust my team to do their jobs. And if you have the right people, it can work.
And how has it now? Let me ask you this question, because this is one that, I found later on in life, but how does that translate to, because you were like a 3 hour a day kind of work guy and then left. Now, are you willing to allow your employees to work 3 hours a day and then leave?
It's a tough case to make now for me. But so we have 2 roles. Right. So our advisors are commission-based employees. They are building their own businesses within our business. As long as they're doing the right things, and they're training and they're working hard and they're closing business and helping people, we let them have some flexibility with their schedule for sure. Yeah. One of the things we try to do is coach, real hunger and, drive and discipline. It's very easy to say, oh, it's really nice out there today. I really like to take the boat out and just take off for the day. But I think it depends on the stage of your career, right? So we're still a relatively young business. We don't have any of the, we have one advisor who's on the edge of retirement for sure. Mm-hmm. But most of us are still in the growth phase of our career on this side of it. And so we don't really have that challenge yet. Yeah. I know we will. I know we will get to the point where we have people on the back nine of their financial services career. And we'll have to mitigate that a little bit because, unfortunately, we're in a service business, right? So, what I did in my past career, my phone's always on. It's 24/7. If my customer needs me at 3 a.m, they can call me. They will get me to answer my phone. But actual engaged working hours is a different thing. Yeah. And so I think there's a way to find balance. But that being said, if I'm paying you for your hours, then we have a different expectation.
Yeah, and that makes sense. I remember when I was taking a step back from Treehouse when I was running it, I said to my manager, and I said, hey, if you find a way to make me more money and you work less hours, I'm cool with that. Yeah. But it has to be just like this relationship where, if you find a way to delegate more work, but the income is still what it is or better, then, I don't care if you work 20 hours a week. That's right. And so, I guess that would translate to what you guys are doing over there. If they find a way to bring in double the amount of customers and work less hours, then you're completely fine with that.
Yeah. And I teased earlier that, I make a terrible employee. Yeah. And the problem is that when you have somebody who can do that, the rest of the team doesn't necessarily understand the whole big picture. All they see is, well, Joe's not here 40 hours a week. Why does he get that privilege to be able to come and go as he pleases? And I struggled with that in my career. I think the way you handle that is just transparency, right? And so if I look back, there was producers on the property and casualty side that, genuinely didn't do much, right? There wasn't a lot of results. They might have been there 40 hours a week, but there wasn't much results. And so the people who actually knew what I did when I was there and understood the work that I put in, they kind of got it, right? They understood that, okay, he's not here a lot, but he's also the guy who, when he's working, he's fully engaged. He's not just having water cooler talk. He's not just, checking the internet or playing games on his phone. He's genuinely committed to getting the job done. And so, I'm a big fan of pay for production, whether it's commission or piecework or whatever, because at the end of the day, especially as a business owner, the only thing that matters is results.
Yep.
Right. So, I think that transparency is important to making that a smooth, tolerable situation for everybody. And, I was like that with my customers. My customers, especially the ones, like most of my customers are 10 to 15 year clients, right? And so they all know who I am. They know that I'm accessible whenever. Yeah. If I don't answer the phone, it's because I'm in a meeting or on a phone call, but I will return your call within minutes. And, and at the end of the day, customer experience and production are the two things that matter to me.
Yeah. And people underestimate the small stuff too. Like something as simple as, they can call you and they can get you, or they can call you and they know you're going to call back in 10 minutes or whatever that may be.
Yeah.
It goes so much further than people think, we're living in a day and age where, I just did it to you the other day. You messaged me about a golf tournament. I didn't get back to you for 2 days. Right. And it's like, because the people are so distracted, and, we're getting messages on, 18 different platforms, and it's like, it's hard to keep track of it all. Right. And so, I get that. And especially now it's like, I think now it's almost easier to be, especially in service-based businesses, just getting to the basics, like return phone calls, follow up with people. You're probably going to dominate because everyone's so focused on all of this fluff and stuff that's out there. And
being in the business I'm in, and I watch, I'm in a few Facebook groups and stuff, and I watch for, people who have complaints and issues about their service providers, and it's always the same. It's, either my rates have gone up, or I don't get service, or, there's no explanation. And people are turning to, social media to get direction. Yeah. And it's crazy. Like we're highly paid professionals. Why can't we just return your call? Yeah. Why can't we just give you advice? Last year we had the biggest downturn in the market since I've been in the business for sure. And I think since probably COVID, if not longer. And the comments that I've seen are just, it's mind blowing. But I think, especially when maybe, I don't want to knock other advisors, but maybe when you don't have good news, it's like, I'm afraid to pick up the phone to call you. I don't want to have to tell you the bad news, but I just think you get out in front of it. Right. And again, it's the transparency, it's the communication. We have conversations with our clients, regularly in, down, if we have a bad day or a down market. I mean, we talk about, the benefits of dollar cost averaging, right? Like, listen, the market's on sale today, right? People who are pulling their money because they're freaking out about the results of last week, they're misguided. Yeah. Right. This is the time to buy. If I could sell you $1 million house today only for 30% off, would you buy it? Yeah, right. You wouldn't even think twice about it, right? Because the housing market is going to come back. Yeah. The stock market is going to come back, right? So whether it's just returning a phone call, whether it's answering an email, I'm a big proponent of managing your inbox, right? I literally have 0 messages in my inbox at the end of the day. If I can't delegate it, return the message myself or file it. Like, not everything requires a response, but it's dealt with, right? And when I see, and we see with our team too, we've got people with 100 emails in their inbox. Like, how do you manage that properly?
I have no idea.
Right.
Yeah, it drives me nuts. Yeah.
And if I'm your customer, I have an expectation that you're managing it.
Yeah, I have 0 emails. Yeah, 0 emails unread.
Yes,
you know, I actually created. I don't know. I'm sure I got it from somewhere, but my system is like super simple. It's like, if I read your email and haven't responded to it, I just left it. I just mark it as unread.
Yeah.
And so anything that has remained unread in my inbox is just things that need to be dealt with. So I just hit that little filter that says unread only, and then I see all of the emails that are left undealt with, and I do what I got to do to clear them. It's like pretty simple.
Yes, it's a great strategy. Now I take it a step further. I don't touch things twice.
Oh. So once you open it, you respond.
I deal with it.
Yeah.
And if I don't have the time in the moment, right? If I'm going into a meeting or I've got a call scheduled, I don't go to my email. But when I go to my email, I'm focused on my email.
Love that. Yeah.
And you know, however far I get, I get. Right.
Yeah.
And it's literally, so I've had situations where this is not something I can deal with today, but I need to deal with it by next week. And I'll set myself a reminder, and I'll take the email out of my inbox and I'll dump it in my calendar.
Beautiful. Yeah.
Right. So now it's on my calendar to do. Right. Yeah. And I live by my calendar. So if something's in there, it has to get done. Yeah.
You know, and it is like, you know, you're the second guy I've had on this podcast. One of the other guys is Lyndon Crane. He has the Coffee with Craner there, and he owns his schedule, right? And he's a young kid, and he just recognized that something as simple as, if I just keep my schedule in check, I'm going to be productive, and probably I'm going to call back, I'm going to follow up with people, and it's like, wow, yeah,
he's a great kid. I actually interviewed him. We wanted to hire him.
Oh, no way! Oh, how about that? Yeah. So it's like, he's on his shit, and it's like that one simple thing and now it's like, because we were so busy these days, it's like back in the day when I ran my window washing company, I just had like the appointment book, and I was just super on. If I was going to be late or something had happened, I would just call the customer and say, like, last job went a little long, we're going to be there in a half hour. And people just, like, my growth just expanded so rapidly.
Communication and transparency.
That's it, and people loved it, right? And so that comes back down to like integrity. But yeah, like little things like, if you're listening to the podcast and if you have like 100 little red dots all over your phone, it's like, if you're not managing your emails, your time, your notifications, probably, like, my phone is clear. There's not a single red notice on my phone at any time, right? Absolutely. So anytime I open my phone, I'm clearing every single one of those if I'm in the space. But I like what you said about, like, I don't even open my email unless I'm ready to sit down at my email. That's something I don't do. I'll read an email and be like, I can't get to that. I just mark it unread so that when I know I sit down, that one still needs to be dealt with. And so that's probably a better way, because what happens when I do that is, if I get an email that's important, but I need to get onto my computer to, get a document to send to somebody, now, even though I mark it on red, now it's my mind is going.
You're starting to think about it, you're distracted.
And I'm pulled out of the present moment with my kids or whatever that may be. So I love just saying, hey, if I can't do everything that needs to be done, that email just goes unchecked until I'm ready to open it up. Yeah, that's great.
Yeah, and my wife will tell you, she gets frustrated with me because, I'll be in the zone dealing with emails at home, and she'll be talking to me, and it's a terrible habit, but I block it out. I don't hear anything around me for that 15 minutes that I'm working. But at the same time, it works the other way too, right? And so when you're with your kids and you're with your family, you have to be able to that's the time that you're not going to pay attention when your phone goes off. I struggle with that a little bit. That's tougher.
But owning your schedule does allow you to remain present, because if you have it blocked off, like tonight, and like I have it blocked up, like Harlow has soccer. So it's like, I know from 5 o'clock till 7 o'clock, it's just like, that's all I'm doing, and there's nothing else, and so I know what I'm doing tomorrow, and I know what I had to do today, and I got it all done, so I can be present at that soccer game. And I probably can, completely not check my phone if you have to, if it was necessary. Yeah. Right. So yeah, I love that. So let's make a shift here, because, one of the things that we've been talking about a lot when we're in the dance waiting room and stuff is life insurance. And, I got hooked up with, my life insurance guy, and, this is a testament to like how patience works. Is like, I signed, term life insurance with this guy, 10 years ago, and I was paying like $40 a month. And then I bought like a $1,500 policy like recently, from him. And so it was before I met you, so I would have went with you, obviously, if I wouldn't. That's okay. But the thing that attracted me to this whole idea was this idea of full life insurance, what do you call it?
Whole life or permanent insurance. There's a couple of versions.
And so once I heard the concept and how it worked, I was like, oh my God, like I have to get on this. Like this is what I need to be doing. And there's there's so many benefits of it. And I don't even want to try and explain them. But why don't you just walk me through a couple of scenarios of like, how you would present whole life insurance to somebody who's just regularly investing in like RSPs or whatever that may be, and what would you say to them is like, hey, this is the benefit of this thing.
Yeah, for sure. So the first thing I'll say is I am an insurance geek, right? I came from almost 22 years in the property and casualty space, and now a few years into the life insurance space. And I'll say, most people don't get excited when they talk about insurance, and I get it. It's not sexy at all. I get it, right? But the things that you can do with life insurance, that people don't really understand, are amazing. And so, in my life, I had a couple advisors, very similar to you, initially just sold me some cheap term coverage. I had a mortgage to cover off. So they sold me a term 20 policy for, $250,000. And, it was cheap, right? It cost $20 a month, and it was, an easy sale for them. But being a high income earner, I was very disappointed to learn that, had I had a good advisor, back then, I would be so much further ahead. So the benefits are really, term coverage is like renting, right? It's temporary. You buy a contract for a period of time. Usually it's to cover off a debt or a contract of some kind. Maybe you've got some debt or whatever.
But it's also meaning like, in 20 years from now, your house is going to be paid off. You're not going to need as much income. So, that's why that term can end. Right. And then, if you did die, you have the house, you have more investments, whatever.
Absolutely. Yeah. And it has a need. There's a purpose, right? There's a portion of the market that it's appropriate for. If you have one of those needs, if you have a budget issue and it solves that problem, it's a great tool. But understanding that there, especially for building wealth, there are better tools. That's kind of what got me into this business. And so, I had, at the time, 17 years of insurance background, and I had never heard of these concepts. And when Sean started, showing me some of the things that I could do for my family, one of the comments he made is we can actually show you how to purchase your family's net worth. And that was like a crazy statement to me. I was like, how can I guarantee my family's net worth? How can I just pay a bill and know that that's where we're going to land? And so initially he showed me a couple concepts. I was skeptical, right? Having been self-employed, I always struggled with borrowing and the hoops you have to jump through to borrow. And, but he showed me this plan that we can pay into this policy for, 20 years. And there's different versions, but the plan was 20 years, I'm going to pay into this policy. And when my wife's ready to retire, she can just go to the bank and show them the policy and effectively borrow against the cash value that builds up inside of this policy. And I just found it really hard to believe. And so I made him jump through some hoops. He actually got me a letter from Manulife Bank saying, yes, this is a real thing. Yes, we do this all the time. Right. This is how it works. And they spelled it out for me. And I did take it to my accountant. And I'll say this, most accountants don't have a lot of insurance knowledge. It's just not what they really do. They understand term coverage to cover debts, but they don't really understand insurance as a sort of investment vehicle and the tax benefits. But I ended up switching accountants because, frankly, I do expect my tax specialist to be able to advise me on tax implications. Yeah. And, I found an accountant who did understand, who actually owned some of these products themselves and was able to explain to me from an accounting perspective why they bought the products and what they did with them. So the really cool thing about permanent insurance is that once you've paid for it, once the premiums are paid up, and usually you can do either a 10 annual payments, 20 annual payments, or you can do a pay for life, pay to age 100. But we typically sell 20 pays. Yeah. Once you have it paid up, it's guaranteed to pay, right? When you will die at some point, and it can never be taken away from you unless you commit a criminal act or, there's a couple exclusions, of course. Sure. But you'll never pay more into it than you'll get out of it. It's guaranteed to pay.
Yeah.
And permanent insurance doesn't just come with the death benefit. It actually builds a cash value within the policy. And this is the interesting piece. So it's a lot more expensive than term coverage, but you get the guarantee that it'll pay and you get the cash value. So part of your premium that you pay every month or every year is funding this cash value, and it grows. And the way it grows, if it's a whole life policy, which we sell the majority of the time, it's paid through a dividend. So the way dividend returns work is either you get a dividend or you don't, and you can't lose capital, right? So you can't have a negative year. So even in years where the market is negative, even in 2001, the S&P TSX index down 33%, most, if not all, insurance companies paid a dividend, right? So you're kind of insulated from market risk. You have tax-free growth because it's within an insurance product. So your cash value is growing completely tax-free. The way you access the dollars is different than an investment account like an RSP or a non-registered account or even a TFSA, where you don't actually reach in and withdraw the money. You leverage against it, and you go to a bank or an insurance company and borrow against the cash value of your asset, kind of like you do with a mortgage against a home. And so your cash value continues to grow as if it's all there, completely tax-free, while you get to take the borrowed money and deploy it somewhere else and generate more revenue.
Yep.
So your money actually grows for you in two separate areas at the same time, and all completely tax-free. And then when you pass, and this is kind of, when my daughter was born in 2019, it really made me start thinking, I want to create generational wealth. I want my kids to live in a world where they're not a slave to money, right? That we've got the ability to do what we want when we want, within reason, of course. And so the death benefit on life insurance is completely tax-free as well. So you have three elements of complete tax-free growth, usage, and passing within this insurance concept that you can't get anywhere else. There is no other way to do this.
Right. And I think the way that someone explained it to me, because, I think people are getting it. I think he explained it well there. And I think the way that it was explained to me that really clicked for me was like, it was essentially like, you're paying down your mortgage, right? And you're building up equity in that mortgage. And now you can go and borrow against the equity in that mortgage, but the house value is still going up.
That's right.
And that's the same way that this thing is working. It's like you have this cash value, like after you pay for 10 years, let's say you have a $300,000 cash value, you could probably pull out 80% or 70%. I don't know what they allow you to pull out.
Yep.
You can pull out 70% of that cash value, but your investment stays.
Yes.
You're just borrowing against the inevitability that is going to be paid out, right? And that's the security of it all, right? And so you could then take that $300,000, you could start a business, you could, do whatever you want with that $300,000. Now, granted, yes, you're going to pay interest on that money that you've borrowed, but the same way you would you pay interest on the equity that you took out of your home, right?
Yeah.
And so it's
it depends how you structure it.
Yeah.
So when you say you're going to pay interest, some people will intentionally choose to pay the interest because if you're in Canada, if you're borrowing to reinvest, you actually can make that interest tax deductible,
right,
which makes it a really, really good option for business owners, real estate investors. It's an amazing opportunity. But you can also, for somebody who's maybe just doing this as an insured retirement plan, you don't have to pay the interest. You can actually capitalize the interest and let the death benefit pay it off when you die.
right.
So there's a couple angles to take there. But yeah, it's a little bit complicated in that there's a few moving pieces. But we have sort of illustrations and the house is a perfect example. If you have $1 million house today and you've got a $500,000 loan against it, your house is still worth $1 million. And if the housing market goes up 10%, your house is now worth $1.1 million, right? You get the benefit of full growth on your investment, not just on the equity.
Yeah. And the other thing I love about it is that the way I have it set up is, well, mine is set up through my corp, and I don't know if they all have to be set up through a corp.
They don't.
Okay. So like you can set them up personally, but mine's set up through my corp. And, mine is only in my wife's name because it was better and cheaper to do it that way. And then I went and got term on my own. But the thing that's good about it, if she does happen to die tomorrow, even though I've only injected X amount of dollars, I'm getting paid out like that. The full, like that's the life insurance piece of this thing. Right. And so not only with that $2 million, like I think that's the amount of our policy, will it go to our children, after we pass. In the event that, she passes right away, we get the $2 million too. Yes. Right. Which is like, oh my God, this is like, it's kind of like it's just such a great tool for security and, and then also being able to take that money in multiple ways tax-free. One, when you borrow against it, it's tax-free, right? Yeah. Two, like if I went to go and get equity off my house, I don't have to pay tax on that loan that I got. Right. Two is that when, it is finally about to be paid off, my kids will inherit that money tax-free through capital gains exemption, I think, or something like that. Or
it's just that, so the Insurance Act allows for death benefits to be paid tax-free.
Oh, nice.
So okay. It's just the law. It's interesting that you say that, and so it sounds a little bit morbid, but the truth is the return on your investment on day one is the most it will ever be. Yeah, right. So literally, if God forbid somebody bought insurance, got it in force, made their first payment, and literally died that first week or whatever, it's literally the highest return on investment you'll ever get. Yeah. We don't sell on the hopes that will happen, of course, but understanding that there's an immediate enhancement to your estate the minute you make a payment on a life insurance policy.
Yeah.
And I mean, most people struggle with the conversation about life insurance, and there's a number of reasons. The first one is there's a misconception about, insurance is only for the people that I leave behind when I die, right? It's to cover off debts. And that's kind of a morbid way to think about it, but that's term coverage. When you're talking about permanent insurance, it's a completely different conversation. It's about how can I buy insurance today that allows me to live my life better than I was previously. And so, the first thing I'll say is, I'm a big fan of whole life insurance. I think it is, if for most people, it should be part of their plan, if not the majority of their plan. For me, it's pretty much all I do. But at the same time, like the tax-free savings account is an amazing investment vehicle.
Sure.
And I do believe that everybody should be working to maximize their contribution, max out your contribution room in a TFSA as well. So, the struggle that I have is to not just project my love of insurance on people all the time. Right. I do believe it's the single best investment vehicle you can use, but there are some there's just some moving pieces that you need to deal with. Whereas having liquid cash in a TFSA account makes total sense.
Sure.
But I do believe that there's definitely a business case to be made for sort of a variety of investment vehicles, if that makes sense. We've dealt with a lot of real estate investors, for example, who they don't want to buy an expensive insurance policy because I think I can make more money adding another couple of doors to my portfolio, right? And listen, I support that. That's a great idea, but it doesn't change the fact that you have insurance need, right? And so when we have this conversation with people, like you could have debt, you might think that you're going to leave this real estate portfolio to your kids, but then there's going to be a capital gains implication, right? And the one thing that I find common amongst almost all wealthy people, business owners, successful people, high net earners, whatever it is that we do what we do to create a better life for us and our families.
Yeah.
And insurance is the perfect vehicle to allow that transfer and keep the government and the banks sort of at arm's length.
Yeah. And I think when you really start earning money, like when you really start making, especially your own money, like, when you have a job, it's pretty simple. The tax comes off your paycheck and you understand it. But when you really start, even if you have a job and you really start saving some money, right? And when you put, let's say you dump all your money into RSPs and now it's worth $1 million, and then you're saying, okay, I'm ready to retire. You start pulling that money out and start paying tax.
Yeah.
You know, you got $1 million and you say, I'm going to take out $100,000. You got to pay $50,000.
Yeah.
That's when it becomes like a reality. And it's like, or like, you know, for me as a business owner, it's like, you know, in this corporate lighthouse, it's like, I don't take a salary, but if I were to take, you know, $100,000 out, I would have to pay $50,000 in tax on that $100,000 or whatever the percentage is. Like, but it's pretty much 50%. It's like 40,
pretty close.
You know, pretty close, right? And so it's like when you really start seeing that and be like, oh, I had $100,000 and now it's half. It's like, this is when you finally start like thinking, okay, how can I protect my money as much as possible in a way that is going to benefit me and the family? And so you said something. We were playing a golf tournament together, and you said something to me which I thought was interesting. It's like, you know, with respect to an RSP, it was like, do you want to pay tax on the seeds or the crop?
Yeah,
which I thought was such a great analogy. And you know, because I've used RSPs. I'm luckily the way I put money in RSPs the last few years. Like that's where I'm putting my monthly kind of investment, and luckily that I did that because I sold a business and I had a bunch of tax implications, and that helped me kind of like divert a little bit of that tax.
Not pay some of the tax.
Yeah, you know, like it was like $18,000 I was going to have to pay in tax, and it basically got almost zeroed because of my RSP. So I was like, okay, this is great. But I now, after having that conversation with you, I'm aware. I'm like, why would I put any money there really? You know, because unless I was looking to divert some of the taxes that I'm paying now, you know?
Yeah.
And so,
so this is something that I actually am very passionate about. And I know that, you know, you'll probably have some viewers that disagree with me. And I'm open to a conversation for sure. But, because I think you can always learn from somebody, right? Regardless if I agree with you or not, there might be something that is worth listening to, and you should do that. But, you know, when I look at the RSP model, there's a couple circumstances that I actually am okay with my clients investing in RSP. And the first one is if you're getting employer matching, of course you should do that. You know, that's the closest thing to free money you'll ever get.
Yep.
The second thing is, you know, you may not qualify for insurance, right? So insurance might be off the table. And if you have a tax bill today that you really, truly don't want to pay and you want to divert it, that's fine. But what I don't like about the RSP marketing campaigns, you know, the biggest reason that people put money into an RSP is because their advisor tells them, well, listen, I'm going to get you a tax deduction. I'm going to get you a tax credit this year, right? So whether it means you don't have to pay your tax or you're going to get a little refund or whatever it is, that's a very easy conversation to have with a client to make them understand why they should do it. The problem is, as an advisor, I believe you have a duty to explain the hard part of the conversation. And the hard part of the conversation is that what we hear advisors saying is that it's a tax deferral. So you get a tax credit today and we're going to defer your payment on taxes until later. And so the analogy that I used was if you were a farmer and you had a bag of seed and I was CRA and I came to you and I said, you can either pay tax on that bag of seed today or I'll let you grow it all year. And when you harvest your crop, I'll come back and I'll tax you on the crop instead. What would you rather do? And I realize it's not a perfect analogy, but it gets you thinking. And the thought process is that they tell us that, you know, deposit your money in an RSP today, defer the tax until later, and withdraw it in retirement when you're going to be in a lower tax bracket. And that sounds good. But what is the reality, especially for high income earners, that you're actually going to work all your life, probably own a business, maybe some investment properties, and actually be in a lower tax bracket on retirement? The truth is we've probably built assets that are going to continue to pay us. We're still going to have taxable income. We're going to probably get clawed back on our OAS because we make too much money. Mm-hmm. We're going to be in the highest tax bracket in retirement. All right. We haven't even factored in inflation and tax changes. Like, what is the chance that the government's never going to change the tax rates or rules, which we know that just happened with the capital gains tax change? So I don't believe that to be a true scenario or true thought process for most people. For some people, it will. Listen, you know, you've got an elderly couple in their retirement who like to garden and hang out at their, you know, home, and they don't spend a lot of money. Sure, it works for them, right? But then I can point out that at 71, they're going to be forced to RIF. And if they've been diligent savers and they've done a really good job and their advisor's done a great job of growing their money, now we have the problem where the government said, we're going to force you into a RIF at 71. And so now we don't even need the money you're forcing us to take, but you're taxing us on it.
Yeah.
And when we add up the amount of tax you'll pay over your lifetime, it's way more than you should have to. The problem is, what are your options, right? And in Canada, there's really only 4 areas that you can save and invest your money, and it's RSP, it's non-registered investments, it's tax-free savings account, which is the best tax vehicle, or tax efficient option you have, or there's the permanent tax shelter, which is the insured retirement plan, the whole life solution, right? And the biggest challenge that I see is when you look at the financial literacy in Canada, where does the education come from? It comes from the bank.
Yeah.
Well, the bank is not going to sell you insurance products. They can't. So you're not going to learn about this fourth option. And they're going to promote the best one for them, unfortunately.
Yeah. Right.
And so, listen, there's really good advisors out there, especially if you're at the private wealth side of the bank, that can grow your money really well, that will give you good advice, that will do what they can for you. The problem is that if my advisor is only an investment advisor and doesn't even tell me about the other option, that's a problem. And the truth is, I'm not saying that the insurance option that I love is the best option for everybody, because that's absolutely not true either.
Right.
But this is where you need to have the ability to do both, so that we don't end up in a competition situation where, you know, your insurance advisor is telling you, oh, this is a really, really great strategy for you. And your investment advisor is saying, no, it's very expensive. You don't want to do that. Insurance is a scam or whatever, right? And what you need somebody who can give you comprehensive advice. And really, that's what we try to do. Of course, I have a leaning towards insurance. And the way we train our team, so most of us, I would say, lean towards insurance. But we try to train our team to understand the buyer psychology and what works for them and take our bias out of it. Because at the end of the day, you may not like the insurance option. I don't want to be a one-trick pony, right? So, I mean, I would say we probably lean about 70-30. Our portfolio is probably about 70% insurance, 30% investment. Yeah. But it's because it makes sense. Yeah. Right. And we do a good job of explaining that to people. Absolutely, you should max out your TFSA. That's a no-brainer. But given the opportunity to have RSPs or not, unless you're getting employer matching, there's not really any reason to.
Yeah. Yeah, I agree with that. Yeah. And it's so interesting. There's so many more pieces of the puzzle. And I think, you know, if you're, you know, and I would say I'm kind of like an ideal client for you. It's like, I'm, you know, middle of my life, I have good income, you know, I've built up some wealth and assets, you know, I have the ability to pay, you know, a bigger premium than maybe, you know, someone younger, but, and I have a young family who I'm starting to think about. Right. And so that's where I got turned on to this. And I was like, oh, like this is what I need to be learning about. The one question I do have for you that's not really that related, but it is something that I'm also interested in is, you know, you have the same kind of thought process as mine, which for me comes from like a childhood of like, you know, kind of let's say not having enough. And so I want to give my kids everything. And I recognize in that, like my kids they're going to be wealthy, you know, because of what I've like even in this is like, they're going to be wealthy. And I've also set up other stuff for them, and, you know, they're going to be wealthy kids. But then it's like, you have walked this fine line of giving them too much. Right. And so, part of the reason why you and I are probably, you know, entrepreneurial and driven is because, we weren't given everything. And so then you walk. So what's your plan there, and how it's all going to play out?
It's a really good question. And I've been accused of maybe overdoing it a little bit in terms of spoiling my kids. Yeah. So I've had conversations with people where, and I find it shocking, but I've had people say to me that, you know, I don't want to give my kids everything. And I get it. Listen, I don't want the result of having a silver spoon child. Right. So there's expectations as they grow up that they are hard workers, that they're good students, that they are good people. But that being said, who doesn't want better for their children?
Yeah. Right.
And if you can say, I don't want better for my children, that's a problem, and we won't get along very well. But at the same time, I get it. I want my kids to be hard workers, right?
Yeah.
So we homeschool our children. My oldest is only 5. She'd be technically going into kindergarten this September, but she's doing math at a grade 1 level.
Yeah.
Right. The biggest challenge with homeschooling is to make sure your kids are socialized. So my kids are in activities probably 4 or 5 nights a week on average. You know, soccer, skating, gymnastics, dance. We had her in music as well. I'm now doing the music lessons with her, but yeah, just trying to find quality. My schedule is tight, so like if we're going to do an activity that I can actually add value to, that's what we do, right? We we started a morning routine, 5 a.m., 6 a.m. We're up and we're doing workouts, and the girls will come down and I mean, it's limited, but they do a morning workout with us.
Yeah,
right?
nice.
So, but will they have wealth? Yeah. I mean, one of the things that I did right from the start, and actually how I fell in love with whole life insurance was, like, insurance will never be cheaper than effectively the day you're born.
Yep.
And so my kids all have about $1 million of permanent whole life insurance, which most people think is crazy. And I get it, but I also at the same time hear those same people talking about how their kids are never going to be able to buy a house.
Right.
My kids won't have that problem.
Yeah.
Right. And they're not going to be coming to me for a handout. They're going to have a policy that has a cash value that's significant. And, if they need it for education, if they need it for a down payment on a house or start a business or whatever they decide to do, it'll be there. So, I mean, there'll be some control over that, right? Sure. I'm still the policy owner until I turn it over to them and until they demonstrate, responsibility and good moral character and all of the things that I'm hoping for them. I'll maintain the control.
Yeah.
Right? But if you look at the Rockefeller family, I mean, this is how they, maintain their wealth, right?
Yeah.
And it's a great strategy, right? So you effectively have built your own banking system, your own family banking system. It's a little different in the US. Obviously, they use family trusts, and Canada doesn't really work quite that way. But that being said, I mean, if I've got to pay interest, I'd rather pay it to my own bank, right? And so there's some really, really cool concepts that you can do. And I think, for people who have some money, and especially if you have children and you're looking at like, what can I do to improve, my family's financial situation, create some generational wealth, avoid paying some taxes. The one question I ask, and we never get anybody to answer this kind of the wrong way, but given the opportunity at the end of your life, would you rather, whatever your estate's worth, would you rather half of it go to the government, or would you rather the whole thing go to your kids?
Right.
Unanimously, I've never had anybody say, "Well, I don't mind if the government takes half." Right? Not once. And so, listen, if you got your money in the bank, the bank is great. A lot of people think that I hate the bank. I hate paying fees and taxes unnecessarily.
Yeah.
And, if your money's, in mutual funds, you're going to pay some unnecessary fees on exit. Mutual fund advisors will tell you, yeah, but if you buy segregated funds, you're going to pay fees up front. Fair point, right? Yeah. I mean, it's a conversation. The truth is I can demonstrate that the difference in fees is insignificant in most cases. And I can show you the value and why you want them, right? Yep. Because for the fee, you get something.
Yeah.
And if there's value, then it doesn't matter what the cost is. And so I think whether it's RSPs or insurance or whatever the right fit, it's important that we do a deep dive, really understand you and your situation and what's going to help put you in a better situation going forward. Because we don't have good financial literacy or financial education in this country.
No. Yeah, I think it's super important to get an advisor that really gets you to understand it, because especially in this insurance piece, especially to like someone who's never been exposed to this stuff, it can seem very complicated, right? But if you get someone that explains it well and has the patience to really make you understand, and I'm from like a customer standpoint, you just got to keep asking until you fully understand. One of my old MOs was, I was a people pleaser, and I would just say yes, and even know if I didn't understand. And so now I won't. And sometimes it gets frustrating for the guy explaining it, because I'm like, I will not leave this table until I fully understand this, And so it's like I just keep getting them to repeat it or whatever. So if you're in that situation and you're calling Jason, just make sure you press him. But he'll do a good job of explaining that to you. So this has been like super interesting, and I love tax shelters, and I love figuring out how to keep as much of my money as possible. It's a great conversation. Where can people find you? Like after they hear this podcast, they're gonna want to be interested in having conversations.
Absolutely. So Spectre Financial, right? SpectreFinancial.ca. You can get all our contact info right from the site. You can book a meeting with us right from the site. Honestly, we're on social media, Facebook, Instagram. We're located here in Windsor, Jefferson, and EC Row. Easy to find us. Happy to come to you guys as well. The biggest thing is what I will say is, so I'm a big believer in the Pareto principle, Dave. And so what you just said is it's one of the biggest reasons that I chose to partner with Sean.
Right. And what's the Pareto principle?
So the Pareto principle is the 80-20 rule.
Oh, okay. Yeah. Right? Yeah.
And I don't mean to knock anybody, but just in general, the 80-20 rule applies in everything you do in life. And so if you were to put 100 advisors in a room, I do believe that they all mean well, but 80% of them are average at best, right? And 20% of them are really good. And whether they work at the bank or, a private firm or wherever they work, they're good advisors and they mean well. But the problem is, out of the 20%, they may know what they're doing. Can they teach it to you? Because the challenge is, as a consumer, I don't know the difference between a good and an average advisor, or a great and an average advisor, because I don't know enough. And so you need somebody that can actually teach you the strategies that they're using. If you don't understand it, and I'm not saying that you have to know enough to be an advisor,
sure,
but you need to know enough to make a confident decision in what you're going to buy. And so with Sean, when I met with Sean back in 2019, and he started selling me some of the products he sold me, he made it very easy for me to understand. And we talk with our clients about napkin presentations. So it literally looks like something you might sketch out at the bar on a cocktail.
Yeah.
But we can take very, very advanced concepts that the 1%ers of the world use and scale them down, and we can teach them to you in really, really, quick 2 to 5 minute type conversations where we sketch stuff out and make it easy to understand. And that's a difference maker. And I think that's why we've been successful, because our customers really understand what we're trying to sell them. We're not talking over their head. We're not using complicated language, industry jargon that they have no idea what we're talking about. I mean, that's easy for a financial advisor to do, to throw out a bunch of words that your clients have no idea what you're talking about and overwhelm them. And to your point, just say yes to.
Yeah.
But making sure that your clients are actually understanding what you're buying, or what they're buying in that case, is really, really important. And an educated customer is a good customer for us.
So, yeah, man, that's awesome. It was a great conversation. I'm glad we decided to do this. I'm glad you came in, because I think it's super important for people to try and keep as much of their money as possible. So,
thanks for having me.
Yeah, thanks for coming on. And if you enjoyed this podcast, you got any value at all, just remember to hit that like and subscribe, and we'll see you again next Sunday.